This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil gained more than $1.50 per barrel on Tuesday, rebounding on technical factors and bargain hunting after a decision by OPEC Plus to boost output sent prices down the previous session, although concerns about a market surplus persisted. Brent crude futures rose $1.57, or 2.6%, to $61.80 a barrel by 10:31 GMT, the first gain after 6 consecutive declines, while U.S. West Texas Intermediate crude added $1.53, or 2.7%, to $58.66 a barrel. Both benchmarks had settled at their lowest since February 2021 on Monday, driven by an OPEC Plus decision over the weekend to further speed up oil production hikes for a second consecutive month.
Saudi Arabia has signaled that it is willing to enter a painful price war to assert its dominance over other oil producers, but worsening global economic conditions mean the kingdom's standard playbook might be less effective this time around. Saudi Energy Minister Prince Abdulaziz bin Salman in recent weeks has appeared to threaten an all-out price war to restrain recalcitrant OPEC Plus members that have failed to comply with the alliance's production quotas. The strategy appeared to shift into a higher gear over the weekend. On Saturday, 6 key members of the Organization of the Petroleum Exporting Countries plus Russia and Kazakhstan agreed to rapidly unwind production cuts for a second consecutive month.
Moving on to the top news in the energy sector.
India's diesel exports likely hit their lowest level in over a decade in April as major exporter Reliance cut refining output for maintenance at a time when domestic demand was robust, trade sources and analysts said. India, one of Asia's top 3 diesel exporters, exported around 1.15 million metric tons, 9.69 million barrels, of the industrial and transportation fuel in April, an average of data from LSEG, Capella, Vortexa and 2 trade sources showed. This would be the lowest since February 2012 and a significant drop from a nearly 1 half-year high of 2.83 million tons registered in March, according to official data.
Russia's oil price in rubles has fallen to a 2-year low below the 4,000 ruble per barrel mark and some 40% lower than planned in the federal budget, data showed, piling pressure on the Kremlin, already saddled with a burgeoning budget deficit. Driven by expectations that production will exceed consumption, global oil prices have lost over 10% in 6 straight sessions and dipped over 20% since April when U.S. President Donald Trump's tariff shocks prompted increased bets on a slowdown in the global economy. Oil prices have also dropped following the decision of the OPEC Plus to speed up oil output hikes. Next, we have the top news in metal markets. Copper prices rose on Tuesday as the dollar eased, but weighing on sentiment was the prospect of slowing global growth and demand due to U.S. import tariffs and a trade war between China and the United States. Benchmark copper on the London Metal Exchange was up 0.7% at $9,436 a metric ton at 10:53 GMT. We are neutral now and bearish second half of the year on seasonality and policy shifts, said Panmure Liberum analyst Tom Price. This year is ultimately going to be hurt by tariffs once they start to have full impact on trade flows.
Gold prices rose to a 2-week high on Tuesday, as tariff threats from U.S. President Donald Trump lifted demand for the safe haven metal, while the Federal Reserve's policy decision this week was also in focus. Spot gold rose 1.4% to $3,381.37 an ounce, as of 1009 GMT, after hitting its highest since April 22 earlier in the session. U.S. gold futures gained 2% to $3,389.20. The structural factors that supported gold in recent weeks are all still around. Trade tensions are not fixed, concern about the dollar as a reserve currency, said UBS analyst Giovanni Stornovo.
We will now look at the top news in the agricultural sector.
Chicago soybean futures fell on Tuesday as traders weighed U.S.-China trade developments and concerns that President Donald Trump's proposed EPA funding cuts could reduce biofuel demand. The most active soybean contract on the Chicago Board of Trade slipped 0.29% to $10.43 a bushel, as of 0207 GMT. Markets are watching for signs of a thaw in US-China trade tensions, with China's Commerce Ministry saying on Friday that it is evaluating a US offer to hold talks on tariffs imposed during the Trump administration.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.